The Union Budget for financial year 2024 is a few days away. It is likely to be the last full-year budget before the general elections in 2024, and it's coming just ahead of the crucial state elections in 2023 this year. What will these considerations mean for policy making in the budget? What can the government do to push the growth pedal even harder? And what will the market make of all of it? I have with me someone who's seen many budgets over the years. Samir Arora is founder of Helios Capital, and it's a pleasure to have him with me in the studios.
Thank
Samir,
you very much.
Great to have you with us here.
Physically with you.
Absolutely. Not on Zoom and Skype, and so this is so much better. What's your sense, Samir? How is this budget looking to you?
Well, actually, when you say that I've seen all these budgets, last few times I have stopped seeing them as seriously because most of the big picture reforms or steps have been taken. And so I think even this budget will be at the end of it more or less event-free, which is what we need. We don't need new sudden announcements. But in general, I would think that because of elections or even otherwise, because of just the way the policies have been, and because there have been good GST collections, good railway budget, railway revenue beyond target and all, that there should be no increase in any tax.
Right.
And secondly, that there should be some more money in the hands of the middle class, because generally they have not benefited at all for many years in terms of anything from the budget.
Right. Do you think, the fisc has not been a concern for a long time now, right, under this government?
No, that has not been a concern because the limit was raised once and then over time it has to be reduced.
Right.
But just coming after COVID now, more time has been given by not only investors to Indian government, but to all governments.
Correct.
That over the next X number of years.
But there's no worry in
there's
that
no
sense.
Today, nobody's worried.
I remember, if you remember, a few years back, that used to be the focal point.
3 point something or whatever, then suddenly became 6. And now, over time, it is supposed to reduce. So there has to be a path shown.
Yeah.
But nobody's looking at it in this budget.
Do you think it'll be a little bit of a populist kind of a budget, as you said?
No, this I don't consider populist. If you just raise some exemptions or you basically make the taxable level, whatever you call it, band higher, that is not that populist.
Some more exemption, basically, some more money left in the hands of...
give some more money to the consumer so that they can buy things that my companies produce. I won't call that populist. I will call that, thank you very much.
Capitalist.
Capitalist, yes.
The one thing, though, is this entire capital gains tax issue, right? I mean, comes up again and again. What's your sense? Anything changing?
I mean, that would be really bad thing if it happens. I think it's not happening because you also need an environment for that. If you are separately saying as a government that GST is doing well, other collections are good, there is no need right now to, in an environment where last year was quite bad for world markets, to increase taxes on a capital gains account where separately everybody knows that no other country gives taxes, charges taxes to foreign investors. Now, since you can't separate between foreign and local, that means now you cannot increase. Plus, the capital gains everybody knows was brought in when STT was first brought in to remove capital gains, and now STT was retained and capital gains was brought back. Right? Previously there was capital gains, then they said do only STT because that's easier to collect. Then now in 2000, was it 18 or 19? 18 they brought back capital gains without removing or reducing the STT. So why do it now when we need capital?
Why rock the boat?
Why do it? And also there is no big picture justification that we are trying to collect more revenue for the government, because the government itself is saying that everything else they are collecting nicely.
A lot of tax experts have spoken to, they said maybe not the rate of taxation, but all these asset classes have all these different thresholds for collecting, right?
Part of life.
Equity is 1, debt is 3, real estate is something, unlisted equity is something. So maybe rationalization.
So do it on the debt side where if you want to help the banks, that the bank deposit gets full tax, whereas a mutual fund with debt or this thing has a lower tax. But don't come to our side, please, because the equity guys are...
the point is rationalization. If it happens, equity goes to debt or debt goes...
you don't touch us and you rationalize as you want. But rationalization should not be seen as indirect way of increasing somebody's tax.
Correct.
Unless it is very specific that this is being taken advantage of. If some loophole is there, that is a different angle. No, I know some loopholes they say in debt, in these market-linked debentures, that, which are not really market-linked. It is just to convert interest income into a capital gain kind of treatment. So that you can say somebody's twisting. But in equities, because generally the world does not pay equity and there is no taking back that exemption, you don't get there if you pay tax here. So that money is just gone from the pocket of the FII. Now the FII and domestic now have the same thing. So therefore it has to be for everybody that please don't raise. Government has to sell, new IPOs have to happen, so many things have to happen. So you are right, don't rock the boat on this.
Do you think it makes sense, and some of the view that the government will actually do more to make sure that India's investment attractiveness stays where it is?
Absolutely, but actually the thing is that India has become attractive, A, for its own reasons, and B, because China has become less attractive. And people have to be nervous about China. Let's not dream that we are substituting China. We are saying the overflow from China.
No, it is +1, right?
It's China +1. It's not China out and only the +1. Correct.
I don't think anybody's saying that. It's +1.
Or you put +2.
+2.
So that people don't say only Vietnam, because supposedly that is the hot alternative these days.
In terms of sectors, I mean, infrastructure, for example, right? There has been a
lot of investment.
I think I was looking at some preview notes from economists. They were saying capex spending could go up another 10, 11, 12% in that range, which actually is on trend and pretty healthy.
So some of these high-profile projects are really good. I was seeing some photos somebody was showing me today on this Mumbai-Delhi
the corridor.
Which with 12 hours you can go from Mumbai to Delhi or vice versa. But we are talking from a stock market point of view. We don't know what that means, so we will just clap for the country and the economy, but we are not buying anything who's making these roads. Because that, first of all, who knows who's getting the road order, and then whether he's giving it L1 and how much money he makes, and then whether he will get paid on time or not. But the infra is happening.
Which is great news.
But correct, as a big picture, every line doesn't have to be that I have to buy a stock for that. So what we have seen over time is that previously we used to look at railway budget and get excited that there is some safety investment. So you're looking for signaling companies and all
that. But railway capex has been a big theme, Samir, right?
That's what I'm saying. But broadly, we have graduated.
Stayed away
we don't do that because we used to do all this all our life. And in the end,
But now there is no railway budget, at least not a separate one.
But I'm saying I don't react to somebody saying he's got an order of making a road or making water pipes or laying down water pipes. All that we say, excellent. Now they can invest in our fund, but we are not investing.
I got that. Any other sectors? I mean, broadly, not from an investment point of view, but banking, financial services, auto.
Exactly. Big picture, if you look at the Forbes billionaires list and say from where do these billionaires come, because that shows wealth creation in the long run, they will only come broadly from three sectors, which are consumer, tech, and financials. I don't think you'll find a fourth. Big manufacturing types are not very many, because mostly those guys get diluted along the way, unless they become very big companies like some TSMC or something, hundreds of billions. For manufacturing companies, mostly because of dilution along the way. The original owners are there, but they are not able to retain
all that value.
50, 60, 70% of the company, which means that those companies needed a lot of external capital to grow, which means from a stock market point of view, it was a dilutive business or whatever way you call it. So big picture, the growth is in these three sectors.
And these are sectors, budget, no budget. I mean,
we are going to not change, but we are hoping that the consumer sector gets a small flip if there is some more money in the hands of the public.
Got that. Samir, stay with us. I have to take a quick commercial break, so let's do that. Samir Arora, Helios Capital, with us. We'll come back, discuss markets now. What does the market do post the budget, and what's Samir's view across a range of sectors? Stay with us.
When it all began.